Good morning, everybody. Thanks for taking the time out of your Tuesday morning. This is October 13th, 2020. My name is Michael Valtos from Order Flows, and I'll be talking about the new advances in order flow analysis. So my goal for you today is to give you a blueprint to understanding what is happening in the market right now based on what you see so you can make better, more informed trades with near zero order flow trading experience. Okay, so in this training, you'll discover an easy way to trade with order flow trends, to easily detect market weakness, to master trading current value, and easily identify aggressive trading. And if you stay until the end, you'll get a free copy of my book, Trading Order Flow. And when you stay till the very end, it's going to teach you how to determine what institutions are doing. It's going to talk about how not all prices are the same, how to limit your risk on a trade, how to determine price rejection, understanding value in the market, and much, much more. So, before we get started, if you have a problem with the sound, you may have to log out, log back in. I know the sound is working fine. I could see it on the computer here, but occasionally, sometimes people get in a little bit early and you can't hear the sound, but that's okay. You could just log out, log back in. So what makes order flow analysis different from other forms of market analysis? Well, order flow analysis gets the trader as close to what is happening in the market as possible. And for some people, that may be sort of a new concept to grasp, right? Because most traders, we like to just look at charts, and you don't think about getting close to the market. In the old days when there was a trading floor, people paid hundreds of thousands of dollars for membership so they can stand on the floor and be in the pit where the market was doing its price discovery, where the bid and the offer was trading, as opposed to being off the floor, where you're paying, a broker to send your order into the pit. The people on the floor, the traders in the pit, were as close to the bid offer because they were the bid offer. When you're trading on a screen, it's a bit different. Now, most people, they just follow the price. But if you're watching the order flow, you understand how it's trading because, the second part is gauging the tendency a market will continue in a direction, right? New trading activity, which is the volume, right? Which is the orders coming into the market, is what's going to move the markets, right? Markets don't move because, oh, we sold off to a fib level, or we rallied to the VWAP. Now the market's got to react. It's the constant flow of orders that are coming into the market and being traded by the traders. That's what's going to move the market. And the third part of order flow is it basically gives you better, more complete information than 99% of the traders out there who are only looking at the open, high, low, close, and maybe the volume at the time. You can be able to see what other traders are not paying attention to, right? Everyone always talks about you have to have an edge in the market. If you have something, if you have a piece of information, right? We're sort of in the information business, as traders, we're trying to capitalize on information that other people don't have access to, and order flow gives you that information. And best of all, I'm going to show you how you can do it without past trading experience, without using complex mathematical formulas, without complicated technical analysis, without macro fundamental analysis, without algorithmic trading tools, more importantly, without programming skills, right? You can learn to read the order flow, and reading the order flow is just like learning to read a book, right? You're going to be able to understand what the characters are doing in a book, just as you're going to be able to understand what market participants are doing in the market. So for those of you that are new to one of my presentations, my name is Michael Valtos, right? And I just want to go through, sort of my past experience, my trading experience. I've got over 25 years of trading experience. I started on the CME floor with Dean Witter, and I spent a couple years down on the floor in the currency quadrant, and I realized that electronic trading is the future. And a spot opened up on their what was called the Globex trading desk because before it just used to, the pit would open at 7:20 and close at 2 o'clock. Then after that, it would go electronic starting, I believe, at 2:30 or 3 o'clock. I can't remember now, so long ago, and run until the next morning around currencies, I believe, closed at 6:45 a.m. or 7 o'clock. It's so long. And then, it would give people time to roll the book to the floor. And I realized, that was going to be the future of trading, and I want to be in it. So I left the trading floor to go work upstairs on the electronic trading desk. After about 3 or 4 years at Dean Winter, I left to join EDF Man on their global macro futures trading desk. And we traded everything you can imagine, from Azuki red beans in Japan to palm oil in Malaysia to sugar in New York. Every commodity future contract in the world we were involved in. After that, I joined Commerzbank, the big German bank, and I was their licensed Eurex trader. Right before, if you wanted to trade Eurex, you needed to have a license that was issued by the exchange. I was fortunate enough to pass the exam back in the late 90s in Chicago before the CFTC put a moratorium on it. And I was one of a handful of people literally in the US trading on Eurex. There was very few people at the time. And I learned the relationship of trading Bunds, which is the German 10-year, against the US 10-year, trading DAX against the EMinis at the time. And all these different market relationships that go on between international exchanges and domestic exchanges. After September 11th, I took about 6 months off, and then I joined Cargill. And Cargill was an interesting experience because Cargill is a big commodity trading firm, right? It's if it was a publicly listed company in the U.S., it'd probably be probably the second largest company. They've got their hands sort of in every sort of commodity around the world that you could imagine, and they account for about 30% of grain exports, about 25% of meat exports in the U.S. But and shipping, they're all into everything. So I ran the futures trading desk in Chicago. Then I was sent out to Singapore to set up a trading desk for Cargill when the Cymex exchange decided to close their trading floor. After my 4 years at Cargill, I joined JP Morgan in Singapore as vice president of futures trading. And I spent 8 years there before I left. And I got married, I had a kid, and I decided, what, I didn't want to do this anymore. I didn't want to go to the office at 6 in the morning and leave at 5 p.m. at night. I was spending more time in the office than I was with my family. I didn't like that trade-off. And everyone thinks, well, oh, wow, you left a job at JP Morgan, why? Because there is a work-life balance, right? And yes, working at a firm like JP Morgan is nice, but you don't have that work-life balance. And I know that trading can provide that if you know how to trade. Fortunately, I spent 20 years trading professionally that I was able to leave there and trade for myself. And in 2015, I released the Order Flows Trader software. And what the Order Flows Trader software was is, I was trading for myself using order flow, right? Using a volume footprint chart, but I didn't like that. I felt limited on the analysis because, there's only so much analysis that you can do in a market on your own. And I met with a programmer that understood order flow, and I said, what, take these concepts that I look for in the order flow, put them on a chart. Okay, so when we released the first order flow software, there was about 4 pre-programmed indicators that how I analyze the order flow. Then in 2018, we did an upgrade to the Order Flows Trader 2.0, and I added more tools that I use to analyze the order flow. And just recently, last month, we released the Order Flows Trader 3.0, which now has a total of 17 pre-programmed order flow analysis tools. And the reason I'm talking about this is because the charts that I'm using in this presentation are generated using the Order Flows Trader 3.0. Now it runs on NinjaTrader 8. And the reason for that is, there's so many different trading platforms out there, okay? And for me personally, and my programmer, he's a NinjaTrader 8 programmer, and for me, I just find it easier to use. I'm familiar with all the other trading platforms out there. For me, my own, I'm not the greatest computer person, but I found NinjaTrader for me personally among the easiest to use, and so it fits nicely. Now, again, the charts and tools I'm using in this presentation are generated from my Order Flows Trader software, but what I'm showing you today, you can apply whether you're using the other software out there like Sierra Charts, or if you're using other order flow footprint software for NinjaTrader, or if you're using the NinjaTrader software that has a basic order flow chart, you can see what I'm going to be showing you. You just have to know what to look for. So hopefully by the end you'll know what to look for. So you'll see how you can easily and quickly apply order flow analysis to your trading to make better, more informed trades. That's what trading is all about. You want to be making good trades, right? Not bad trades. So before we begin, just a brief disclaimer, please realize that trading involves risk, and, trading capital should be separate from your daily living capital. All right, so order flow. Now, before we begin, let's talk about what exactly order flow is and why it's important to understand and improve your trading. How most traders view the market is basically like what you see here on the left, right? They just look at a normal candlestick chart or a bar chart, see what the high, the low was, where the market closed, relation to the open. Whereas an order flow trader is going to be looking at the volume that's traded at each level, right? And what the aggression was. Was there aggressive buying or aggressive selling? They're going to be looking at where the point of control, which is the level with the most volume in the bar, where that was in relation to the bar. There's a lot more information in an order flow chart than a simple bar chart or candlestick chart. And most people think that order flow is reading the time and sales or reading the dome. But to be honest, unless you got a chip in your brain, you're not going to be able to make heads or tails out of a time and sales. The EMinis, which trades 1.5 million contracts a day, the average trade size is like 2.5 contracts. But 2 contracts. So you can imagine, how fast it's moving. And you're sitting there trying to pick up something out of it. You can't. And the dome is okay on some markets, but on other markets, it's honestly pretty useless because it just keeps moving so fast, right? You got to be sitting there trying to say, oh my gosh, we traded 2 ticks up, now we're back down here. What does that mean, right? It's happening so fast that you can't really react to it now under these market conditions. But from the time and sales, from the dome, when you organize the data based on how it is traded, you have a lot of data points to analyze. And the 3 main data points of which order flow analysis all derives from, in my opinion, is the delta, the point of control, and imbalances. Now, the delta is the difference between aggressive buying and aggressive selling. Point of control is the price level in the bar with the most volume. Imbalances is when aggressive buyers outnumber aggressive sellers by 4 to 1 or more, or vice versa, right? If you have aggressive sellers overrunning aggressive buyers, then you have an imbalance. And each of these is important in its own way, and it's from these 3 main data points that order flow, really opens up the trading world to you. So what you saw on the time and sales, what you saw on the dome, right? You could take all that information and put it into a neat, easy to read format that once you understand what you're looking at, you can make better, more informed trades. Now, Order Flow Traders 3.0 has 17 pre-programmed tools that help you understand what's happening in the order flow. So you can see market weakness, you can see support and resistance, you can see market sweeping activity, market imbalances, where the immediate value is, where the aggressive trading is coming in, and much more. Now you can see all this in a normal order flow chart, right? A normal volume footprint chart. But what the order flow trader does is it highlights those areas to you, okay? Again, you don't need the order flows trader chart if you know what to look for. But honestly, there's so much happening in the market, especially nowadays. Over the last 4 years since Trump's been president, these markets have really been bonkers. There's no way to explain it. Where trying to keep up with what's happening, everything is coming in fast and furious. It's better to have a software that's going to highlight things to you, so that you don't have to sit there and pull your hair out trying to figure out, is there market weakness? Was there a sweep? What's the aggressive traders doing, et cetera. Let the software, let the computer do that work for you. So the first thing I want to talk about today is trading order flow trends. Everyone always says, the trend is your friend, right? But you got to ask, why does a market move up or down? Market movement is based on aggressive trading overtaking the passive trading that's occurring right now. So remember, right, markets trade in a 2-way auction. It's very clear when aggressive trading is taking place. So for example, right, you have someone that's buying fruit versus someone that's selling fruit. The person that wants to buy the fruit wants to pay what they want to pay. The person that wants to sell the fruit knows what it's valued at, and they want to make money. So the person buying it, the girl on the left, she's probably thinking, yeah, I'll pay you 5 for this. Well, the woman that's trying to sell it is, no, I'll sell it to you at 6. Well, no trade's going to happen. The woman's not going to buy the fruit, or the woman's not going to sell the fruit if the woman is 5 bid and the seller's offered at 6. For a trade to happen, for this woman to buy the fruit, either she has to lift her bid up and pay the offer, right? Pay the market price at 6, or the seller has to say, you know what, it's getting late in the day, no one's really buying fruit, fine, I'll sell it to you at 5. Okay, that's how a trade occurs. Someone has to get aggressive, someone has to be motivated to want to take action, do a trade. Now, in order flow, there are several ways to determine if there is a trend in the order flow, right? You're going to watch the depth of the market, right? The dome. You're going to look for imbalances. You're going to look for exhaustion prints in bars, or you're going to watch for order flow sequencing. Now, order flow sequencing is something that's new in the Order Flows Trader 3.0, but I'm going to show you how to see it on a normal chart so you can look for it yourself. Now, again, order flow is about understanding what aggressive traders are doing in the market, right? Aggressive sellers sell to passive buyers, right? People that are working a bid or below the bid, those are passive buyers. They're waiting for the market to come to them. Yeah, they want to buy, but they don't want to pay up, right? They don't want to overpay in their mind. But passive sellers are the ones that are working offers, okay? And aggressive buyers buy from the passive sellers. But in all honesty, looking on a dome, it can be very confusing. It's like having all these little puzzle pieces falling into your brain, and then your brain's got to put them all together. Okay, like I said, it's difficult for a lot of people. But when you use an order flow chart, you take all that information from the dome, from the time and sales, and put it into an easy to read format. So for example, imbalances, right? Remember what I said, imbalances when you have aggressive buyers outnumbering aggressive sellers by in the two-way auction by at least 4-to-1. You could use whatever ratio you like, but most people use 4-to-1. Some people use 10-to-1. Some people use 5-to-1. It's up to you. And on moves up, right, you're going to be seeing the aggressive buying in forms of imbalances, right? You can see here, right, these blue arrows I got pointing at aggressive buying, right? These are imbalances. Any volume that's traded on the offer is aggressive buying. Any volume traded on the bid is aggressive selling. But in the two-way auction, for example, down here at the bottom, we got 14 against 143. In the two-way auction, that's an imbalance, okay? 88 against 201 is not considered an imbalance because it's not at least 4-to-1. Again, if I was using 2-to-1, that would be an imbalance, but I'm using 4-to-1. So as markets move up, right, you're going to see imbalances. And that's important because if you're in a position, if you're in a trade, if you're long and you start seeing buying imbalances coming in, that's a good sign, right? You're probably going to want to hold the trade longer. Say you were short here earlier, okay, and you're coming down, then your market just goes sideways, okay? Maybe you're short from 35.40. Okay, then down here we go sideways at 35.27. You're like thinking, is this pause? Are we going to continue going down, or are we going to start rallying? Then you start seeing the buying imbalances. Okay, that's not a good sign. That's your sign to get out of the trade. Just as, if all of a sudden you got long down here at 27, 27 and a half, market starts going up and you see all these buying imbalances, that's good, all right? You're going to want to probably stay in the trade a bit longer as long as there's buying imbalances in the direction of the trend you're going. Okay, on moves down. This was just this morning. All right, we could see, or last night rather, on 7, right, as we're making these new lows, what do you see? Mostly selling imbalances, selling imbalances, selling imbalances as the market keeps selling off. Yeah, there's green bars here, right? Anytime, you're at a low, you see a green bar, sort of your instinct is, well, maybe this market's going to start to turn around. But do you see any buying imbalances? No, you don't. Instead, you just see selling imbalances as the market keeps making new lows, right? If you are short and you're making new lows, I know a lot of times, you make a new low, then you bounce up, but you can often see the buying imbalances come in off the lows. If you don't see buying imbalances, then, the trade is evenly distributed. But if you're just seeing selling imbalances, then the selling is still strong. Now, the second part of talking about trends in the order flow is, let me just take a step back here. Back in the early 90s, Tom DeMark, right, the big technical analysis guy, he's got the sequentials, all that stuff. I remember I was in one of his trainings, and he was talking about the last buyer buying or the last seller selling, right? When the last buyer is bought in an up move, then the market's got no more follow through and it's not going to go higher. It's going to naturally sell off. Just as when the last seller has sold in a move down, the market's probably not going to go down anymore because there's no more sellers. And in order flow, what I've realized many years ago is you have this exhaustion, right? When you look at a bar by bar basis, what I call an exhaustion print is you can see when the buyers, because you're looking at the volume, right? So you can see when buyers or sellers are exhausted as the market is moving. And on a bar by bar basis, you can just see, and at the edges of the bar, right? This is one of the ways I used to trade early on with order flow, well before I even envisioned having the order flows trader softwares. I would just look for bars like this that had what I called an exhaustion print or a single digit print, at the edge of a bar. Here you can see one contract. Here you can see 9, 3, 2. And what it's telling me in this bar, there was no interest in selling at the low of this bar, right? In this other bar, there was no interest in selling at the low of this bar. One contract traded, 9, here, 3, 2. There was no interest, right? If people were interested in the market going lower, it'd be trading decent amount of volume, not 9 contracts, not one, but normally we're trading 3, 4, 500 contracts at a price level. That's what we call an exhaustion print, right here. Right off the high of the day, this was yesterday, right, 11 o'clock. One tick off the high, next bar opens up, one contract, starts trading down. Each bars, what do you see on the move down? You're seeing exhaustion print, exhaustion, small digits, 1, 4, 8, 2, 4, right? That's what you want to see on a move down, right? Once you stop seeing them, then maybe the move is kind of stopped. As when you get down here to around the 17 area, you're not really seeing anything and the market just goes sideways. But when a market has a chance to go back up and test the high, go back up, test the high, and it doesn't, and it just trades very small contracts, that's a sign of buyers basically not really interested in the market at this point and going higher. Now later, an hour later, yeah, it can still go higher, but right now, right, this is why I talk about being as close to the market as possible. When you're watching the order flow, you're seeing what's happening in this bar. One contract traded at the high of this bar. That's significant. 4 contracts, that's significant, right? And it's just there's just no interest, right? It'd be a different story if there's 180 contracts or something else, but there's just no interest there, no interest here. Now this is interesting because this is a 10-year note chart. Okay, 10-year notes. It's a 15-minute chart. 10-year notes trade thousands and thousands of contracts at a price level. Sometimes it trades tens of thousands at a price level. And look at this yesterday. After the high is made, the next bar, it starts coming back up. It trades 9 contracts. 9 contracts in a market that normally trades, you can see 4,000, 5,000, 7,000, 9,000, 1,800, 4,000, 5,000, 7,000, 4,000, 10,000, 9. That sticks out like a sore thumb, right? And what happens? Now that you know that there's no buying interest, right? What do you think is going to happen? Market's going to drop off, right? It's like I said earlier, right? You don't need any strong mathematical formulas to, calculate, oh my gosh, we got this. No, oh my gosh, I could see looking at the volume, it's plain as day. It sticks out like a sore thumb. That is just 9 contracts. Now, the order flows trader software does highlight it to you, and it actually allows you to draw out a zone like this, so you can sort of see, what happens when the market comes back, right? You can see here, right? In the next bar, again, you got 5. Market tests that level, sells off, can't get through it. Here, right, at 27.5, you got the 2, right? Market rallied up within a tick of that and sold off a bit. Okay, so it's fascinating because in the old days, when there's a trading floor, and even in the early days of electronic trading, we used to call this a high tick or a low tick, right? Which is an attempt to probe price to see if other traders are going to be attracted to that level to keep trading, or sometimes if it's at a high or low, to look for stops, right? Because anytime the market is bid offered, bid at the high of the day and it's offered at the high, but the high isn't traded. Sometimes, someone will come in and try and high ticket to trigger a stop at a new high. So as well as, if, as the market makes new highs, because the market's going to keep going up. So what traders would do oftentimes is, if it's bid at the high and it's offered at a new high, trade one or two contracts. See if other traders are going to, screen traders, people off the floor, are going to say, oh my gosh, hey, we just traded a new high. I better buy some, right? They're trying to sort of suck in people to come in to keep the market moving, right? Keep the trend moving. So, imagine if the market is bid at the high, offered at a new high, a tick higher, trades one contract there, then immediately sells off. Do you think the market's going up? No, that's your fading opportunity. Now when you put some of these tools together, right, like exhaustion and imbalance, right, here's a perfect example, right? This market's just coming back up towards the high, and in this bar, we're about 4 ticks off the high. We've got exhaustion, right? You got the single print, and you got the selling imbalances, 1, 2, 3 imbalances in that bar. Market sells off, right? It's again, it's you don't need fancy indicators. Once you know how to read what's happening in the market, things become really easy. Now, order flow sequencing is a new thing in the order flows traders 3.0 software, and what it is, it's a market condition when the order book gets eaten up with subsequent higher volume levels. So, for example, okay, remember this is the dome, right? And you can see here on the order book, right? Market's 39 at 39 and a quarter. There's 98, 146, 232, 301, 357, 446. So what you're seeing is a solid order book where each subsequent level there's more volume, okay? And the reason for this is oftentimes, if someone's trying to defend a level, right, they're just not going to put 1,000 in here at 9 and a quarter. They're going to put some at 9 and a quarter, some at 9 and a half, more at 3/4, more at 40, more at 40 and a quarter, etc. They're going to sort of stack the order book to make it look top heavy. Now, the same would be said on the bid side, if someone wanted to support the market. But as you can see here, there's only 78, then 143, then 287, then volume drops down 183, 299. This is a whole number at 338. Oftentimes at whole numbers, you get more volume. Then small volume here, 165, 158, 167. So this is what I call a solidified order book, right? It's someone trying to defend the market from keep it going, in this case, preferably to stop it from going higher, right? Maybe they're trying to defend a price level for whatever reason. Whatever reason, I don't know. All I know is they're stacking the order book and making it heavy. Now, if the market trades through a solidified order book, it's a sign of a strong market, either up or down. I'm dating myself here, but this is the Kool-Aid man. When I was a kid, I used to watch this commercial of Kool-Aid, and the Kool-Aid guy would run through the wall. And it's sort of like that, in the market. Now, if you're looking at a normal order flow volume footprint chart, it takes a trained eye to see this, but you can see here 104, 111, 260, 297, 343, 537. And this is a solidified order book. Now, this coming in at an area, right? This is sort of your swing high. People they're trying to defend this area, trying to keep it from going higher above, above the 95, 96 area. Okay. And you'll see in here, right? You don't see these sequences, right? This is just 188, 395, 431, then 188, right? Down in here, you don't really see anything happening in here. There's another one up in here, the 123, 143, 187, 343, 686. Oftentimes as you're going up to a high, you do run into price defense or going into a low price defense trying to support the market. But it takes a trained eye to see this, right? And this is what one of the things that we put in the Order Flows Trader 3.0 is we highlight that to you so you can see it, right? And you can see how the market in the next bar came right down to that level. What was resistance now becomes support. And you can see it in here as well, right? You can see the sequence here, the sequence here. This was crude oil, right? I know a lot of people, don't necessarily trade EMinis. Most of the charts that I use in here are EMinis, but I also want to show you on crude, right? Yesterday, we had this big sell-off in crude where it dropped like $1 in just a few minutes, and right before the drop off, what do you see, right? We were going sideways in here. Then you see the sequencing come in, boom, right before the big sell off from 39 90 area down into, the 3930s and below. Here you got another push down with some sequencing, right? We had just had the big push down. Someone came in, started bidding this market, but the sellers overran that, right? They just ate right through that volume. Now, this is a 5-minute crude oil chart. Okay, this is this morning, the 13th. This is around between 6 and 7, or 6 and 8 o'clock, right? At the high of the day, you see the sequencing coming in here. There's one buy sequence in here, but more selling as we sell off from the high of the day at 40.44. This is EMinis. This is a 5-minute chart. Whether you're looking at a 1-minute chart, a tick-based chart, a volume-based chart, or a range-based chart, it will still appear on there if it happens. Okay, but again, you got to know what to look for. If you're looking at a normal order flow chart, you really got to concentrate at what you're looking for. It's like reading a dome. You got to really concentrate on reading the dome. This was early morning today. This is about 1:30 Chicago time AM, right? You got that sequencing coming in right here, right before that big bar down. These are those bars as a trader where it drops from the 25 area down into the 15 area, 10-point move in one bar that you're like, oh gosh, sometimes you sit back at charts and say, oh yeah, I just need to catch a bar like this once a day. Well, with order flow, there's a bearish sign up here also with the prominent point of control and the exhaustion print here and here, but sequencing came in right here. So even if you're like, well, you know what, I'm not sure if this market's going to sell off because of this, once you see the sequencing coming in behind the bearish prominent point of control, behind the exhaustion print up here, you can feel fairly confident, in getting short here. I'm not saying that every bar is going to be like this, but as a trader, these are those bars that you just love to get, right? Because everyone always talks about, oh, you got to let your winners run. Well, in this case, you just boom, it just drops immediately and fills you immediately. Then went sideways. Then here's another sequencing here and here. Now this just 2 hours ago, 9:45 at the low of the day in the E-minis. It's on a 1-minute chart. We had the sequencing coming in on the bar at the low of the day, right? And then we rallied right up from that. We rallied up, follow through. Look at this, right? This is what I talk about being in a trend, right? Understanding what's happening, right? You got your reason for getting long, right? You're at your low of the day, you got a divergence, you've got a sequencing, and then you start seeing imbalances coming in on these bars, buying imbalance, buying imbalance, buying imbalances, right? So you can feel confident in writing this out longer rather than saying, well, yeah, I've got my, my 2-point take profit or my 3-point take profit. If you're seeing all these buying imbalances, that's bullish, right? You're probably going to want to hold on to this trade a lot longer. So the second topic I want to talk about is detecting market weakness, okay? And like your phone battery moves up or down, weaken over time, right? Just like your phone, you just leave it on your desk, whether you're using it or not, and the next thing you know, the battery is weak. Order flow can tell you when that's happening. Now, there's two types of market weakness. There's what I call a bearish market weakness, and that occurs when the market has been moving higher but can't sustain the move higher because the buying is weakening. There's also a bullish market weakness. I know people get confused sometimes when I say bullish market weakness because how could something weak be bullish? But it occurs when the market has been going lower and lower, but the selling just tapers off and is exhausted. The selling is weakening basically, right? I mean, the market just can't go any lower because there's no more selling. So once you have that weakness coming into the market, in weakness in the sense of no more selling, then the natural direction is going to be up. So remember, bearish market weakness, market has been going up, but buying is weakening until there's no more strong buyers. How can you tell? Well, the easiest way is watch the delta. Is the aggressive buying getting stronger or weaker as the market is going up? So here we got this nice little move up here, right? Going sideways, you come down, make a new low, new swing low, then higher, 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 higher highs, higher lows in each bar, and it just sort of turns around right here. And if you're watching the delta, 102, 72, 50, 35, then it turns negative here, minus 111. So if this move is going to continue, right, you're going to want to see stronger delta, right? Instead, you're seeing weaker delta coming in as the market's moving up. 102, 72, right? It made a new high, but it's only 72 in the delta. The aggressive buyers are weaker than the previous bar. Then you get to the next bar, 50. All right, it's still a green up candle. The market's still going higher. Just broke out of the swing high, but the delta is smaller. It's only 50, right? For this move to continue, you're going to want to see a nice strong positive delta, not 50, right? You're going to want to see 500 or something, or 150, something stronger than the previous numbers. Then you get up here, you got 35. Market doesn't even make a new high. So you can see the buyers are weakening by just by watching the delta. Obviously, the next bar, it's got the negative delta coming in. So even though the market's going higher, it's going higher on weaker delta. Then it turns around and the negative delta comes in and market just sells right off, right? As expected when you see negative delta coming in. Now, bullish market weakness is the opposite, right? A market has been going down, but the sellers are getting less and less until the buyers take control of the market. The selling is weakening. And again, how are you going to watch and determine if it's happening is you're going to watch the delta, see what's happening in the delta. Right? You got to be asking these questions, right? You got to, as a trader, you should always be questioning what's happening in the market. Is the market doing what it's supposed to do in terms of facilitating trade? So here's a market, all right? We're sort of going sideways. Get the big down bar, okay? Minus 1200 in the delta. And then you just sort of rotate around back and forth, go sideways. But you can see here, right? You have positive delta here on this red up bar. Then you got this doji bar. It's minus 245. The next red bar, minus 228. The next red bar, minus 51. Then this green candle, minus 2. Okay, well, yeah, we still got the negative delta, right? Which is on the surface, right? If I had to make a blanket statement, I'd say, yeah, when delta is negative, I expect the market to be trading lower. But what's happening in the market? It's actually the market is making higher lows, and in this case, higher highs. So the selling, right, after that big initial push down, they're still selling, but it's getting much weaker, right? It's gone from 245 to negative 245 to negative 228 to negative 51 to minus 2 to plus 300. You can just see how the selling is, the aggressive selling is been taken over by the aggressive buying, right? And then you can see how the market, rallies quickly, from the 88 area all the way up into the 90s, right? Followed with more aggressive buying. You can see the imbalances in the bars here. Obviously the positive deltas as well. But when you see, volume just sort of shriveling up like that, then turning positive, when you see the negative deltas getting smaller, 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 then turn positive, what do you think the market's going to do? Do you think the market's going to keep selling off? No, of course not, right? Market is just going to keep going in the direction of the trade, right? This is um, sort of a concept. A lot of people nowadays can't really understand this, but I learned this when trading on the floor is and this goes back to being close to the market, right? Is on the trading floor, right? The market is bid offered, right? You can see that on the screen. You can see where the bid offer is, but most people are just watching where is price trading. They're not taking into account how price is trading, right? If you're just looking at this, you're seeing couple red bars, and a green bar. You're sort of at the lows. What do you think is going to happen? I don't know, but you could be definitive in your answer. You see, well, I see the seller is getting weak, and I see aggressive buying coming in, right? So rather than getting late into a move here, by reading what's happening in the order flow, by seeing the aggressive buying, by seeing the aggressive selling dry up, you can say, yeah, this market's got a very good chance to rally up rather than go sideways or sell off, right? It's giving you the better opportunity to trade based on what's happening in the market. Now, there's two ways to do this, right? There's the easy way and the hard way, right? And the easy way is let the computer do it for you. The hard way is sit here and watch the delta on each bar and try and figure it out. To me, that was the problem in the sense that, yeah, I can do that if I'm just watching one market and that's all I'm doing. I'm focused watching my screen, but why not let the computer do it for you? Let the computer highlight those areas of market weakness, either bullish or bearish, and give you a sign, and let you make the decision, right? I don't like to necessarily create indicators that just say buy here, sell here. To me, the order flows trader 3.0 is a tool, right? It's something that says, whack me in the head, Mike, pay attention to what's happening here. Here you got bullish market weakness, right? Then you can put the rest of the puzzle together. But it sort of gets my attention, says, hey, pay attention, this market could rally. Or here, this market is showing bearish market weakness, it could sell off, pull the trigger, depending on how you trade. Now, the third part I want to talk about today is current value, right? And this is an important topic because a lot of traders understand what value is in the market without realizing it, right? And we think in terms of value every day in our lives, but we don't always think about value when trading. Am I getting a good deal? If you've ever been to a vegetable market or, a fish market, a wet market, there's so many people selling the exact same thing, right? And as a buyer, right, you're going to go to the place where you're going to get the most value for your money. And the same thing is like that in the market, right? Because you know that, well, okay, yeah, I could buy, the lettuce here from this lady and she's going to give me an extra onion or something. You're getting value, or, she's going to give me more lettuce, because for whatever reason, she's giving you value. You're getting a good deal. And when you know where value is, right, it's going to, in the market, it's going to let you have better trade location. Better trade location equals better risk management because you have a bit more wiggle room, right? You got into the trade, maybe you got into the trade at the bid. It's like the difference between working a bid or paying the market, right? You work a bid, you get filled, you get a better fill than buying the market. Now, you don't always get into a trade, but you get a better trade location. And oftentimes it's going to give you a little bit extra room, when the trade starts going against you. And it's just going to, in the long run, it helps you much better, because if you're constantly getting into trades in bad locations, it just makes it that much harder for you to profit on a trade. For example, sometimes you're caught off sides on a trade, right? Trade's going against you, and you want to get out, so you work a limit order, and it trades there, you don't get anything. Then the market moves away, and your loss is getting a little bit bigger. Finally, you just say, close the trade, at the market, and you pay the high of the move or you sell the low of the move. That's a bad trade location. And oftentimes that comes from, being into the trade at the wrong location to begin with. So until now, traders have struggled with incorporating value into their trading on very short time frames. Most traders are familiar with volume profile or VWAP. It's easy to look at VWAP or volume profile and identify the levels to trade around. But a problem is with VWAP or volume profile is it takes time for a profile or a VWAP to develop, right? If you're looking at VWAP, maybe starting at, at the cash open in equities, well, you can't trade it in the first couple minutes because it's still defining on what VWAP is. It's probably going to be right where price is. And same thing with volume profile, right? Everyone always talks about, oh yeah, I got to see where the the POC of the day is, etc. But it takes time for it to develop. It's not going to be useful right now. Or you could be so far away from that value, either so far away from VWAP or so far away from the value area or the value area high or value area low, that it's just not going to be useful for your trading right now, right? You want to know where value is right now if you're trading a 1 minute time frame, if you're trading a 5 minute time frame, etc. Now, a lot of software allows you to put volume profiles on your chart, and and they're useful. So this is a 15-minute E-mini chart, and you can see here, the market volume profile has been rallying, right? We've been getting a lot of nice profiles to trade. But the problem is, again, there could be instances you're so far away from value, like, on these days, we're outside of value, right? And we don't really even come back in to test the value areas. So yeah, okay, we're above value. So, you're looking for a certain type of activity to happen. Okay. It can happen, it cannot happen, right? Then you sort of got to, when it gets into this point, when you're so far away from value versus the previous day, then you're not even looking at, value in that sense. You're just looking, okay, what are we doing right now? And it just makes it a little bit harder. So, on VWAP, VWAP's a great tool. A lot of traders use it. And, a lot of traders think it's the holy grail for some reason, but it's basically a volume weighted average price. So that's all it is. And I know a lot of traders like to trade, when we come back to VWAP, we're going to hold it or break through it, etc. But there's days where we just spend all day above VWAP. So if you're the type of trader you're looking for the reversion to the mean, you're not getting it. So you got to sort of alter your trading plan or stop using it. Now, knowing where current value is going to help you understand what's going on as we start to move away from that value. It's better to have current value than value built up over the day if you're trading in the short term. If you're trading on a 1-minute chart, looking at a volume profile for the day, there are some times where it's going to be very useful, but most of the time it's honestly it's not going to be useful. If you're trading a longer time frame, a 15-minute chart, a 30-minute chart, yeah, it could be very useful for you. But on a very short time frame, its usefulness decreases, in my opinion. Now, you can do is you could look at the value area for the individual bar and use it in relation to current market activity. Now, the order flows trader software, I know you can do it on a lot of software. You can actually draw the profile, the volume profile like this for each individual bar, okay? But I found that very not hard to deal with, kind of annoying actually, because you have all these different colors, drawing over every bar. And on what I did on the order flows trader software, you can do that with, you can draw the profiles, but I said, just put a box around the value area, right? You can see these gray boxes. And there's going to be, that just unlocks so much more information for me as a trader, because I know about trading value area on volume profile and market profile, but on the smaller time frame charts, right? You can take what you know about volume profile, what about market profile, and now apply it on micro charts, so to speak, micro in the sense of time sense, on a minute by minute basis. So you can see here, right? We got this area, right? That's forming over, almost what is that? 1, 2, 3, 4, 5, 6, 7, 8 bars, right? 8 minutes where the value is just sort of holding, right? It's a little, you're forming this bigger value area on a longer time frame, but you can see it forming here, going sideways. And more importantly, as you start to come out, right now, two things are going to happen, right? You're trading below value, right? You're going to look for the responsive activity, right? For the rotation back into value. You get a little bit of it, but no follow through. So what do you think is going to happen? It rejects the value area and sells off. And you can see how it's working in here with the selling imbalances as you start to break away. Now some people will say, well, I don't need to know where value is. We're just going sideways. Well, yeah, okay. But, what are you going to do? You're going to bracket the market, put a stop in here, buy stop and sell stop, etc. And by the time the market moves away, you're down here, right? You're already well below this. You can safely say, okay, well, I see here, this is our value area for right now over the last 10 minutes. We're trading below that value area right here, coming in 1029. If you get a rotation back up there, yeah, hey, you know what? I might want to put a short in here. If I get it, great. I could catch a move down. If I get stopped out, my stop's just on the other side of this sort of this value area, right? So it just gives you, it unlocks a lot of possibilities. Here's another example. This is yesterday morning, right? In the EMinis on a 1-minute chart, right? We just went sideways here. You can see in here a lot of value, right? Basically, again, the market's going sideways. You're going to see value areas sort of bunched up. But where it gets interesting, we got 2 bars here at the end of this area where value is finally broken out. Then it rotates inside, okay? Now, at this point, right, when you're trade above value and you trade back in, it's either going to hold or it's going to trade right through eventually. But what do you see? You see a gap here, a big gap in the value. Here's another gap in the value area. Here, you don't really see gaps. They're really overlapping. So, as value markets look for value, right? And when you start seeing the value areas just gapping away, that is a bullish sign if they're gapping to the upside, or bearish sign if they're gapping to the downside. Now, another way to use it is look at it on a bar by bar basis. So there's 3 bars here, bar 1, bar 2, bar 3. Bar 1 and 2, or sorry, bar 1 and 3 is examples where the current bar opened above the previous bar's value area, closed below it, right? That's bearish. That was on bar 3, you can see here we opened up above the previous value area, closed below it. Now, bar 2 is kind of similar, but it just deals with the individual bar. Bars 1 and 3 deal with the previous bar's value area. Bar 2 is we opened above the bar's value area. Now, you're not going to know where the value area is till the bar closed, but what did it do? We closed below the value area for the bar. That's also bearish, right? The same thing would be true if it was bullish, right? If these were green bars, right? If we opened up below the bar's value area and closed above it, that would be bullish. Just as if this was, um, a green bar, this bar 3 was green, right? If we opened up below the previous bar's value area, closed above the previous bar's value area, that would be bullish as well, right? This was yesterday. Monday didn't give a lot of short opportunities, but you can see here at the high, you've got bar 1, we opened above the previous bar's value area, closed below it. What happens when sideways before we sold off? This was a quick short. Didn't, like I said, yesterday didn't give many opportunities to sell. Bar 2, similar, right? What I was talking about earlier on the previous slide. We opened above the bar's value area, closed below it. Now with this type, this bar 2 type, we're not going to know until the bar closes where value is in the bar. But when we open on one side of value and close on the other, the market's got a very good chance to continue in that direction. So as you can see, knowing where value is in a bar on a bar by bar basis opens your eyes to market activity you've never thought of before. Again, there's so many questions that knowing where value area is going to answer. And to help you incorporate value areas into your trading, the order flows trader, we've created a tool to highlight value areas that are bullish and value areas that are bullish. Now, this is just one way to do it. And again, there's so many different types of value area analysis that you can do on a bar by bar basis that is going to put your trading on another level, in my opinion. Is just going to help you unlock what you're seeing in the markets. So if it's bearish, right, it'll print the value area as red. If it's bullish, it'll print the value area as blue, right? And that's different than the rest. Every bar's got a value area, which is just this gray in here. The point of control is the darker gray. So you might ask yourself, can you use that in your trading? And the answer is yes, especially when you see these value areas that are bullish and bearish coming in around highs or lows, swing highs or swing lows. Now, the next part I want to talk about is aggressive trading, right? You want to, as a trader, as an order flow trader, you always want to be looking at what the aggressive traders are doing, because aggressive traders are the ones who move the market. For markets to go up, aggressive buyers need to outnumber the passive sellers. For a market to go down, aggressive sellers need to outnumber the passive buyers. Now, order flow is about understanding what those aggressive traders are doing. Remember, for a market to move, someone has to be aggressive. Either the aggressive seller has to sell to a passive buyer, or an aggressive buyer has to buy from a passive seller. Now, aggressive trading is going to show up in several different pieces of data. It's going to show up in the delta. It's going to show up in the imbalances. It's going to show up in the, in the actual footprint, if you're analyzing the bid volume versus the ask volume, and market sweeps. Okay, market sweeps is sort of a combination of a few of those things, the imbalances and the volume. Now, really simply, delta, as the market is selling off, delta will be negative. As you can see here, the market sold off. It's mostly negative delta. As the market rallied here, you can see positive delta. As the market sold off, you're seeing negative delta. That's a crude, rudimentary way to use delta, right? But generally it's pretty accurate. There's nothing wrong with that. Imbalances, as the markets move up, you're going to see buying imbalances. As the markets move down, you're going to see selling imbalances. So here's yesterday, as we keep rallying, right? You're seeing a lot of buying imbalances, much more buying imbalances than selling imbalances. Okay, you could add that with the looking at the delta. It gives you a couple things that you can really use in your trading. But the one thing I want to talk about is sweeping the market. And you know, like the Cobra Kai thing, sweep the leg, Johnny. Um, we've been using that term ever since, I was trading electronically because, the old NYMEX, COMEX access trading system had a function in there for sweeping. Normally what you would do, like on Globex, so you just buy it through a price, but they had a function where you could sweep a particular quantity and go through there. Now, a market sweep is when a trader goes in and buys or sells a big quantity over several price levels at once. So for example, in this market, it's trading 33.39 bid at 39 and a quarter. Okay. Now a big trader is very bullish and aggressive, right? He has 1,000 contracts to buy. He knows the size can affect the market and he doesn't want to chase the market higher. So what's he going to do? He's going to sweep the order book, right? He buys 1,000 contracts up to 33.40 and a half. Okay. Now big traders, institutional traders, they're really concerned with just the average price. They're not concerned with, oh, I bought 120 at this price, 268 at this price. No, just give me the average price. So okay, your average is 33, 39, 85. But what's happened now is the market's trading 33, 40 and a half. He's net long on an average price at 39.85, and now we're trading 40 and a half. So he's happy because he had a big order he wanted to get done. People say, oh, who buys 1,000? Actually, a lot of big traders buy 500,000, 2,000, 3,000. 1,000 right now, based on the notional value, is what, 170 million dollars. Okay, so if you're managing a portfolio of $2 or $3 billion, 170 million dollars as a hedge isn't out of the realm of possibilities. It's quite normal. And if you're watching a dome, you can see it, right? If you're glued to the dome and you notice that you just had that jump, right? But it's hard, right? If you're watching it in real time, you really got to know what to look for. So this is EMinis, right? We hit the high of the day, and what do you think is going to happen? At the high of the day, we can go higher, or we could be attracting sellers, and maybe sellers could come in. It's hard to see market sweeps in real time, and this is, one of the things that is important to me as a trader, because I want to see things that other people aren't necessarily seeing in the market, and we've devised a way to determine if there is this sort of activity happening. And you can see here, right? There's some sweeping activity up in here. The sweep is basically the result of a market moving very fast. Okay, because what's happening? Okay, someone's got 1,000 even some markets, you can 50 lots is considered a sweep already. It really varies on the market, but you can. It's interesting to see where they're coming in. Okay, so you can see here, right? We just hit the high of the day, starts selling off, aggressive trader coming, someone just sold it down, whacked it down, basically 4 price levels, right? And then the selling continued on down from the 32 areas down into the 20s. Now, market sweeps and stacked imbalances often overlap because they're both aggressive market behavior. Where it gets juicy is when a sweep occurs and there's no stacked imbalance. Okay, so for example, this is Crude. This is a 5-minute chart. You can see some sweeping activity down here and down here preceded the market moving up. This was yesterday in the Crude. Again, also a 5-minute chart. You can see a small sweep here, a sweep here, and a sweep just starting in this big bar down, right? Oftentimes you see sweeps, right? If there's an economic number, or someone from the Fed said something, oftentimes you see someone just coming through, oh gosh, S&P's just dropped 10 handles in a second. Someone swept through the market, right? That's what they're doing. Sweeping happens very often. So you want to be able to determine when they're happening, right? If you can see the sweep happening right here, preceding this bar, where it just drops, 70 cents in a few minutes, you can be happy, right? Those are those trades. These are these bars you want to be short on, coming into the bar. Now, it's not going to say every time you see a sweep, you're going to get a big sell-off like that. You still got to put in a stop to protect you. But, these are those bars that, you sit back and think, this is why I love trading, because being able to see this activity happening in the market just puts you ahead of everybody else. So, wow, I've been on here for an hour. So this past hour, hopefully you'll agree, it's been time well spent. Now, I can't cover everything in a 60-minute training session, But I got a special offer, so you get everything you need to know about order flow. And if you act fast, I'm gonna give you a very special deal. So you're gonna be thrilled, right? The Order Flows Trader. Now this is the Order Flows Trader 3.0. This is the latest version. We just released this upgrade literally about 2 or 3 weeks ago, and it works on NinjaTrader 8. It's not available for TradeStation or Trade of 8 or Sierra Charts. This is for NinjaTrader. Okay, NinjaTrader 8, and it's the volume footprint chart with 17 pre-programmed order flow tools. I've talked about a handful of them here, but there's many others. And it's very easy to set up, right? Once you get NinjaTrader set up, which literally just takes you a couple minutes to install it, you install the order flows trader on there. You don't need templates or anything like that because the defaults are my defaults that I use, and the defaults are set for EMinis, a 1 minute chart. Again, I talk about it in some of the training videos on how to, if you're looking at something like NASDAQ or mini Dow, some things that you might want to adjust. And normally I sell it for $8.99. Okay. Now the order flows trader is like having me sitting beside you, telling you, yeah, there's market weakness here. Here, there's a market sweep, etc. Pay attention. It's like taking all my knowledge of order flow and putting it into a program so you can see what institutional traders are doing in the market. And that was the whole point of me creating the order flows traders. I wanted to take what I analyze the market with order flow and put it into the software so the software can do it for me, so it can sort of take that heavy lifting off of my shoulders. But having order flow software is one thing, right? You got to know how to use it. So I don't just give you the software and send you on your way, try and figure it out. I provide a lot of further education on how to trade with order flow. Whether you're using order flows trader chart, or you have another software but you just want the education. The order flows trading course, right? I sell this $297 on my website. You're going to get it for free. It's 15 hours of video instruction. There's 20 lessons. Is very, very useful in giving you the foundation in understanding order flow. You're gonna get it for free. Also, I did a few years ago, I did a series of 56 videos on advanced order flow tricks, tips, and analysis. This is what I call my Inner Circle video series. You get access to all of this. Normally I sell just this video series for $500, $497 exactly. But I'm gonna give you access to that because, order flow is so robust. There's so many different ways to analyze order flow. I want you to be exposed to all the little different nuances that you can come across, right? So, you'll be aware of, what this means in the order flow, or what that means in the order flow. So it's going to help you out tremendously. Now, the software, the training, and the video series together, it's almost $1,600, almost $1,700, $1,693. But I realize, it's one thing to learn from videos and books. It takes discipline and commitment though, right? Because you gotta sit there and put aside the time and say, okay, I'm gonna watch this video, I'm gonna do this training. What I've found very helpful for traders is live training where you can ask questions. And for the past 2 years, I've been hosting weekly live user training sessions for all the users of my software to join and participate. And I drive home what I saw in the order flow for the past week. You could ask questions about areas you may be struggling with. So you got a simple question like, Mike, I don't know how, I'm trading British pound. What should I be using as a setting for this market? I'm there every Tuesday night starting at 7 p.m. Central Time. I've been doing this for 2 years. It goes back literally to October of 2018. There's 92 episodes already in the archives. So even if you can't attend, you can watch the replay. Okay. So, I encourage everybody to attend, even if you don't ask questions, it's just always nice to follow along. And, this is what it looks like in here. All right, you can see, right, the most recent one was last week, episode 92, October 6, 2020. And what kills me is I see other people selling software, and then they want to charge you to join their trading room or extra training for what? What's up with that? I'm buying your software, you got to teach me how to use it. And that's why I do these weekly group training sessions, is to get you up to speed on using it as quickly as possible. Because I'll be honest, I used to do one-on-one mentoring. I don't do that anymore because of time constraints. But when I did it, I was really hand holding people on everything. But I found that I could reach more people by doing a weekly session because sometimes people got a question on one or two things, and it's just easier to come to the session and ask that question. Mike, I'm using your software. I'm looking at wheat, on a 5-minute chart. What do you think is the most important thing? I've been exposed to all these different markets over many years. You'd be surprised at the markets, even currently the markets that I trade are sort of off the beaten track. Yeah, my main focus is on equity indices, but I also trade commodities and other contracts. But more importantly, I just can't get over the fact that a lot of other gurus and stuff, want to charge you extra for that. Some charge $200 a month for one session a week. That's ridiculous. Right? You're paying money for a software. You want to know how to use it as quickly as possible. So when you add it all up, right, the software, the training videos, the inner circle videos, the weekly training, what do you want to put a price on that weekly training where you just come in, have not one-on-one on with me, but one-on-one with my group, it starts to add up. And you're not going to pay, $1,800, $1,700. It's just a one-time payment of $749. So go to orderflows.com/oft3. There's no monthly recurring payments. I know some people like to charge you, I'm going to charge you $200 a month for as long as you're a member, and it just keeps recharging, and you can almost never cancel those things unless you make all these phone calls and jump through hoops. Now, you will have to pay your data fees and NinjaTrader fees, of course. I'm just providing a software. If you want data, you need data to feed it. But if you have a trading account, the data fees are pretty reasonable for most traders. And again, it runs on NinjaTrader. So if you're using a paid version, you're gonna have to buy a paid version from NinjaTrader. It will run on the free version. I have a lot of traders using the free version because basically all they're doing is they're using NinjaTrader as their charting platform, and they're executing either through the broker's platform or another trading platform. But see what other traders are saying. Other traders are saying, Mike, your order flows trader software is remarkably helpful. I can clearly see now what's happening in the markets. Ziad says, if you really want to trade properly and understand what on earth is happening in any markets, order flow is the path forward. In Mike's experience and explanation, it clicks. So what you do is you go to orderflows.com, you go to this page, you scroll down. Now there's videos and there's a lot of charts and explanations of different things. You can read through that, but when you scroll down, you get to the bottom of the page. To get started, click this button now. All right, you can see what you get here. You get the Order Flows Trader 3.0. You get the Order Flow Trading course, the Order Flow Inner Circle video series, access to our live group trainings, as well as the archives. So if you can't attend, and you click that button, it takes you to PayPal. It's processed through PayPal. Okay, everybody's familiar with PayPal, right? I don't get your credit card information. I don't want it. It's all handled through PayPal. And again, it's just a one-time payment of $749. So you just go to orderflows.com/oft3.html. Make sure you put the .html on the end. So basically you got three options. One, you could do nothing, stay right where you are now. A year from now, watch another video of mine and think, where did this last year go? I just wasted a year of my life doing nothing. Number two, you could take what you learned today, go out there, try to do it on your own, right? Trial and error for the next few months. And perhaps if you're lucky, you'll start to see some positive results. Maybe you're doing something right. Maybe you're doing something wrong. Maybe you got some of the concepts right, but maybe there's a better way of doing it, okay? Number three, take my hand, allow us to walk you step by step through each part of the process. Skip the trial and error, right? Skip this nonsense of blowing up accounts, right? You shouldn't have to do that, but people do, right? So if you do the work, you'll watch as your life and trading transform right before your eyes. So which option is best for you, right? You want to put the ball in the back of the net, so to speak, right? You want to score, basically. But you got to think about what motivates you, right? You want the freedom to do what you want, freedom to go where you want, freedom, maybe the freedom to do nothing, right? This is me with my family on vacation. This past summer, we went to Mount Rushmore, right? Trading's given me that freedom to do the things that I want to do with the people that I want to do. Now, I say freedom to do nothing, that is freedom, right? I remember when I was younger, still single, sitting on a beach in Hawaii thinking, God, I'm so bored out of my mind. But that was freedom. Freedom, just do whatever I want. Okay, I'll just go sit on a beach today. Yeah, I'm bored. Okay, I'll do something else. Trading gives you that. I told you about my experience at JP Morgan. It just got to the point where it was just a drag going into the office every single day. I mean, yeah, the money was nice, and some of the people there were nice to hang out with, but still, it's like the fun had just been drained out of me, and I wanted fun back in my life, and I wanted freedom by trading, but for myself, that's how I got that freedom. But as a special bonus today, for Investor Expos, I'm going to also give you guys access to the order flow playbook, which is a course. It's one of my favorite courses. Normally I sell it for $297. I'm going to give it to you for free. And there's actually, I talk about a bunch of trade setups in there. There's about 10 setups that, even if you just apply one or two into your trading, it's a very good setup. You'd be amazed at how your trading has improved. So again, to get started, go to orderflows.com/oft3.html. And what you're going to get, you're going to get the Order Flows Trader 3.0, the latest version, valued at $899. And you get the Order Flow Trading course, which is valued at $297. I mean, I don't say valued. This is what it actually sells at. I sell it literally every day at that price. People are buying it, and we give you access to that. The Inner Circle, valued at $497. That's what I sell it at. Right? If people want to say, can I get access to that? Yeah, it can. Here's the link. You can see what the price is. But more importantly, you get the weekly live group trainings. Tonight we've got a live group training going on at 7 p.m. Central Time. And you also get access to the Order Flows Playbook course, which is also valued at $297. But again, it's just a one-time payment, $749. Go to orderflows.com/oft3.html. More importantly, again, it's not, I'm not going to say, oh, a month from now, oh yeah, I'm going to charge your credit card another $199 or something. Forget that stuff. Um, you know, Pay for something. You shouldn't have to be chained to it like, oh my gosh, this is great, but I got to keep paying for it the rest of my life. No, this is good software. You pay for it once, right? That's how it should be. Now, if you stuck around here, you want a copy of my book, right? Go to orderflows.com/book.html, enter your name and email address, and click this submit button. Okay, and it's going to take you to the download page after you click submit, where you can download the book. It's 150 pages. It's funny, we released this book in China, right? The Chinese market, a lot of interested people in order flow there, and we're now in our second printing of the book, coming up in a few weeks. So it's a very good book, and you'll find stuff that is very interesting. Now, I don't normally like to show trading results because a P&L is useless because it doesn't teach you anything about trading. People say, oh, show me your P&L. This is my P&L from Friday. I didn't trade yesterday because of the holiday, even though I'm sort of kicking myself. But I've got a family with kids, and I'm not always able to trade the way I would like to trade for sitting in front of the screen for 6 hours because my kids are doing home schooling, not homeschooling, but the distance e-learning. This is my son. He's sitting at the end of my desk. I had to buy a little desk to put him on. He's got his laptop there, and he's, here's, I don't know what he was doing here, music class or something, but I don't get to trade, for consistent periods of time, like a 5-hour block, a 6-hour block. I get a couple hours, 8 a.m. until about 10:30. Then, after lunch, because I got to cook him lunch and all that stuff, maybe another hour or two later. So I just trade ones and two lots at a time while my son is over there doing his e-learning, right? You see, I traded, this was October 9th. This was today, it was last Friday, right? Yeah, 41 contracts. Not every trade is going to be a winner. I do get stopped out. $950, minus the commissions. This is mini Dow, you can see right here. At the end of the day, it was, plus about 700 something. It was a decent day, just by sitting around, reading the order flow, buying one, buying another one, sell one, like that, in and out. I'm comfortable with my trading, that I'm able to do that. And I want you to be comfortable with your trading as well. So get started now. Go to orderflows.com/oft3 to get started. That's the main thing, right? Is you got to get started. And a lot of people in life, they don't get started. They just sort of sit around and wait for things to come to them, and eventually it just never comes to them, right? They're sort of waiting around looking for things to happen, but unless you take action, nothing's going to happen, right? You're going to ask yourself, what did I just do this past year? right? What did I accomplish, right? Take control of your life, you know, and for me, trading gives me the opportunity to do what I like to do in life when I want to do it with my family, which is who I want to do it with, right? It gives me that freedom. If you want that freedom, a lot of people think, well, I got a full-time job. I can't just start trading the market. The markets trade beautifully at nighttime, right? I showed you some examples in this presentation of activity happening, at 1 a.m., 2 a.m. You could even trade during the Asian hours, which is like 8 p.m., etc. The markets are always open. There's plenty of time for you guys to be trading the markets. So most importantly, you got to get started, right? And I said, don't wait for more time to pass. We created the software. We don't charge $3,000 for it like a lot of people do, 3,500. We wanted to keep it affordable, right? We wanted to, cover our expenses on programming and testing and all that stuff. Don't really make much money off of it, but the whole point is to get order flow out there to people so they could improve their trading. People say, well, if you're such a great trader, why don't you trade? Well, I do trade, but at the same time, if I could help people, that helps me, right? Because sometimes I try to explain the market to somebody and they just don't understand it, and I sort of got to figure out another way to explain it, then they get it. When the light bulb goes off, that's the greatest feeling in the world. Seeing a light bulb go off in a trader's head and they understand the market. But more importantly for me, sometimes when I'm trying to explain something to a trader, right, they don't understand my direct way. So I got to sort of go, take a longer route, go over the side or something. Then I start to realize something that, maybe I didn't notice necessarily before in the market. And ultimately, I also learned something. So, it goes both ways, right? I miss the interaction of trading on a trading floor, whether it's on the CME floor or in the office, the big trading floors, with other traders. This gives me a way to interact with other traders, and I also learn, right? So it's not all one way. Here, this is the information. I also learn in feedback from other people. Like when I released the Order Flows Trader 3.0, the thing with value areas, someone came back to me and explained, oh, this is fantastic because now, they trade a certain way with Bollinger Bands that they said something to me. He says, oh, when I see this value area move back into the Bollinger Band, it's gold, right? It's a high percentage trade for them. I feel good because sometimes, there's so many different ways to read the order flow. I don't pretend to know everything. And, if somebody teaches me something in return, that's great. So this is a way, it's win-win for everybody. So more importantly, get started, and, I'll end it there for today. So thanks everybody for watching this training, and I hope you guys have a great day. So take care and enjoy the rest of your day. Bye bye.